This is Nightly Business Report with Tyler Matheson and Sue Herrera.
You're hired. Job gains more than double from last month as the unemployment rate falls to a decade low.
I don't value IBM the same way that I did 6 years ago when I started buying it.
Big blues, big bruise. Warren Buffett dumps a third of his IBM shares. Should you?
Repurposed for a purpose. Meet the sisters, part of a military family who had a bright idea and are giving back while growing a very successful business. Those stories and more tonight on Nightly Business Report for Friday, May 5th.
Good evening, everyone. Welcome. The Nasdaq and the S&P 500 set records, even as IBM shares tumble. We'll have more on that in just a moment. But we begin tonight with jobs. The labor market hasn't looked this good in a decade. Job growth recovered in April after a lousy March, and most agree that the economy is getting very close to full employment. Employers added 211,000 positions last month, more than expected. The unemployment rate dropped to 4.4%, which is a 10-year low. A broader measure of unemployment that includes discouraged and part-time workers also fell. And although wages grew compared to a year ago, the Federal Reserve wants them to pick up even more. Hampton Pearson reports tonight on America's employment picture.
The April rebound in hiring was dramatic. From just 79,000 jobs in March, more than doubling to 211,000 workers added to payrolls last month. At 4.4%, the unemployment rate is the lowest in a decade.
The real story here is the tightness in the labor markets. Didn't really show up this month in the year-over-year figures. As I said, the base effects are pretty strong there. But the Fed's going to pay attention here.
There are still more than 5.5 million job openings nationwide, with a shortage in many skilled professions triggering competition and higher wages and a mini boom for job recruiters. The Porter Group, headquartered in Columbia, Maryland, specializes in business-to-business sales and services with corporate clients from New York City to the Washington, D.C. area. A spike in business in recent months now has the firm getting 2,400 new applicants per month. The median salary and benefits for those who get placed around $85,000 a year.
It's really a war for talent, if you will, going on right now. And people, at least from what we're seeing, a lot of people are getting more money even than what they're really qualified for.
But the lion's share of workers are still dealing with stagnant wages, up just 2.5% year over year to around $26 an hour, according to the Labor Department. In April, hiring was strongest in lower-paying industries, restaurants and hotels, which added 55,000 new workers. Healthcare was second, with 37,000 workers and a wider range of salaries. Leading economists say the wages versus inflation debate will be back on the table for monetary policymakers.
Everybody's emphasizing that the Fed's going up in rates, which of course they are, but they're going very slowly. There's no panic. There's no sense we have to clang the bells because inflation is on the horizon.
I think it's very likely that they go in June. I also expect a hike in September. And then in the fourth quarter, I'm looking for a start to balance sheet adjustment or an announcement.
This week, monetary policymakers said sluggish first quarter economic growth was likely transitory. Today's hiring rebound backs up that claim. For Nightly Business Report, I'm Hampton Pearson in Washington.
Let's turn now to Jim Swanson for his perspective on today's jobs report and the stock market's response to the data. He's Chief Investment Strategist at MFS Investments. Mr. Swanson, welcome. Good to have you with us. It seems to me that the stock markets tend to perform best when the economy is growing, but not overheated. Inflation is a little bit, but not too much, and interest rates are low. We seem to have that, right?
We do. And you have to remember this whole business cycle, the economy, people have been lamenting it's growing too slow. The average growth rate's been about 2%. But the stock market kept going up because profits were strong. So don't always equate the economy with profits or with the stock market. But right now, the economy is on very solid footing, yes.
You, according to my notes anyway, say that the implication is that we can't, though, get all that much more growth out of this economy because there aren't as many people to employ. We're close to full employment.
Yeah, and that's the dilemma. When people talk about let's see more growth, it's very tough to get it. The two drivers of growth are the number of people willing to work and what they call productivity, how much, let's say, services and goods you get per hour worked. The government tells us that's been falling. It's not been very good, and we can count the number of people, and that's not growing very fast. We're pretty much at full employment, so don't expect the U.S. economy to ratchet up in its growth level. I think that would be very disappointing if people think that.
Yeah, so some of those other sort of internal measures, like people who are working part-time but would rather work full-time, that's come down. One of the stubborn things that people, the nitpickers, point to is the idea that labor force participation has been relatively historically low and not moving up. My counter-argument to that, and I'd like to get your reaction to it, is that I think is structural and represents a demographic change. In other words, baby boomers retiring, leaving, and not wanting to work.
11,000 people in this country turn 65 every day, and we look at the numbers, 85% of them don't work. So they're dropping out of the workforce, and you mentioned inflation. Well, wages have a tough time going up because these are the highest paid people in the society, and they're leaving, and they're being replaced by younger workers who don't make quite as much. So that tends to limit the amount of runaway inflation that people keep talking about. So two things, slower growth and not as much inflation as we've seen in the past.
So what does this mean for the market then? If I'm an investor and the market's been on a very good roll, do I continue to put money to work in this market, or are you a little cautious given the fact that you don't expect the same level of growth?
I'm tiptoeing around this market, and let me start from the viewpoint that by any measure, and we look at a lot of them, the market is expensive. And, it has been rising for a long time, and you don't want a market that's going up faster than profits. And I think that could happen later this year. I see signs that profits could not rise as much as we're seeing now. They're very strong, but I think that will fade again. We've seen these mini cycles. And I think people should be cautious because we're now coming up on the 8th anniversary of the business cycle. And the longest one we know of since World War II is 10 years. So as you get closer to, let's say, the next recession, people should be more cautious and less in the stock market.
Jim, thank you very much. Appreciate it. Jim Swanson with MFS Investments.
Thanks for having me.
You bet.
On Wall Street, the S&P 500 and the NASDAQ closed at record highs as energy shares followed a rebound in oil prices. And while the Dow also saw gains, they were capped by a decline in the shares of IBM, which we'll talk about in just a second. The blue chip Dow index advanced 55 points to end the week at 21,006. The NASDAQ added 25 and the S&P 500 rose 9. For the week, the major averages were all up fractionally.
And more now on IBM, which saw shares fall when CNBC reported that one of its biggest investors has lost confidence in the company. Berkshire Hathaway chairman Warren Buffett sold a third of his stake, saying simply that IBM hasn't performed the way he expected when he started buying shares 6 years ago. In an interview with Becky Quick, he further explained his decision.
The earnings have been obviously disappointing. I mean, 5 or 6 years ago, I think they were earning 20+ billion pre-tax, and maybe it's 13 billion now, and I don't think the quality of earnings has improved. So it's been a period when I'm sure that it's been tougher than they thought, and it's been tougher than I thought. But I was wrong. IBM is a big, strong company, but they've got big, strong competitors too.
At the end of 2016, Mr. Buffett owned 81 million shares of Big Blue, making him IBM's single biggest shareholder. He started cutting his stake in the first and second quarters of this year, and he has since stopped selling, but still owns more than 50 million shares. In trading today, IBM fell 2.5% to just about $155 a share. Buffett purchased shares of IBM at an average price of roughly $170.
So if Mr. Buffett is selling some of his IBM shares, should you be selling as well? Kim Forrest, portfolio manager at Fort Pitt Capital, joins us now to talk about that. Welcome back, Kim. Nice to see you again.
Thank you.
So what do you make, first of all, of Mr. Buffett's move to sell IBM?
Well, it was really surprising. And I'd say it was equally surprising as to the day he announced that he bought the shares, because he was a long-time person. He had, for a very long time, said he would not buy technology. He didn't understand it. Well, maybe Warren didn't understand this purchase fully, and I think that's why we're staying in while Warren's getting out.
Why are you staying in, and what would change your mind? It's been a long time. This stock has underperformed the S&P over the past few years. I think over the past 6 years, it's up like 8%. The S&P is up 90%.
Well, when Warren bought in, what he didn't understand, and I don't think a lot of people understood, was a lot of the sales were going to China. There was a political change there, and they became China first buyers, so a lot of those sales dried up. But there's a lot of changes that are going on. That's not the only thing. The cloud came in, big data came in, and IBM has really great clients. And by that I mean they're really big companies that depend on the systems that IBM sells them. But here's the thing, we're going to the cloud. So a lot of spending has not been done on what IBM does. And they did some acquisitions. They are moving towards the cloud, but their clients aren't moving as fast as everybody else. And plus, those sales are not quite as high in margin as Warren would like. So we see the future being provided a little bit by IBM, or a lot by IBM to its clients, but probably not at the margins that Warren wanted when he initially bought the stock.
So it sounds like you're expecting a little bit of volatility in this stock. Do you expect a management change or reshuffling?
Well, I wouldn't be surprised. Part of a boss's job, and as CEO, you're the big boss, is you have to explain what you're doing to a lot of people, not just the employees and clients, but also your shareholders. And it looks like Warren didn't receive a message that he liked, or maybe Ginny wasn't able to really get him excited about what IBM can do for its customers and then in turn for the shareholders. But either way, Warren's out, so maybe Ginny's out too.
Yeah, if you're not keeping your biggest shareholder happy, it can increase pressure on you. Kim Forrest, thank you. Kim Forrest is with Fort Pitt Capital. And still ahead, high-stakes election for the global market.
I'm Michelle Caruso Cabrera in Paris, France, ahead of this Sunday's election. The voters here are choosing a president, but in the rest of Europe, they see it as a referendum on the European Union and the euro. More coming up on Nightly Business Report.
Federal Reserve officials said the central bank should cut its balance sheet in half. The president of the St. Louis Fed said that trimming should start in the second half of this year.
The size of the balance sheet is larger than we would like, so that's why I've been an advocate of beginning to shrink the balance sheet by ending the reinvestment policy. I think we could go down to as low as $2 trillion.
They put that card in there so he knew who he was. There's a little confusion. As we've been reporting, the Fed purchased a lot of bonds in the wake of the financial crisis to shore up the economy. Investors will watch how and when the trimming happens because it could have a similar effect to tightening interest rates.
The French go to the polls this Sunday to choose their next president. It's one of the most consequential French elections in decades because it has much wider implications for the future of Europe. One candidate wants France to keep the euro. The other wants the country to abandon it. Michelle Caruso Cabrera reports tonight from Paris.
It's the final day of campaigning for the two French presidential candidates, Emmanuel Macron and Marine Le Pen. Both are working to sway voters like Jean-Pierre Messier.
How many cars were made here each day?
600.
600. How many people lost their jobs?
3,000.
Mercier was the head of the union at this now empty Peugeot Citroën auto plant. The plant was one of more than 200 factories that closed in 2014. The exodus of manufacturing jobs hasn't stopped. In the town of Amiens, Whirlpool factory workers are on strike. concerned they will be out of work next year when their plant moves to Poland. Both candidates visited the plant this week. Macron, who supports more integration with Europe, was booed. He eased some of France's very rigid labor laws when he was economy minister, and these workers think he'll do more of the same if he becomes president. But Marine Le Pen was cheered. She wants France to leave the European Union and quit the euro. She says the Whirlpool employees are victims of globalization, and she wants tougher labor laws. But that's not what business owners want.
All the collection, the production of the collection are made in France.
Virginie Radis started a new fashion line 4 years ago. She says it's tough to be competitive in France.
When economists look at France, they think the labor laws here are too rigid.
Yes.
Do you agree?
Yes.
France has a strictly enforced 35-hour work week. It's also extremely difficult to do layoffs. And worker protection taxes, some of the highest in Europe.
You have to be very cautious also to hire people, because if you do a mistake, then it is more difficult to change.
Unemployment is just one of the key issues in this election. The others, terrorism and immigration, and whether or not the euro and the European Union are the cause of all three. For Nightly Business Report, Michelle Caruso Cabrera, Paris, France.
Well, a drop in mall traffic hit sales at Revlon, and that is where we begin tonight's market focus. The cosmetics company posted a loss and said weak demand across all divisions in North America dented results. The company added that it remains focused on restoring brand growth domestically and expanding its presence in Asia and Latin America. Meantime, shares down more than 23% today to $19.30. The health insurer Cigna said strong membership growth in its government plans helped profit top analyst expectations. Revenue also in ahead of estimates, and the company raised its outlook for the year. Cigna shares up 2% to $160.25.
In a push to restructure, Pearson, the world's largest provider of textbooks and education products, is cutting nearly $400 million in costs by 2019 and is considering selling its U.S. business. That news sent shares higher by 13% to $9.53. Pipeline operator TransCanada saw earnings more than double as the company benefited from a recent acquisition and higher profit in its Mexico pipelines. Both profit and revenue beat expectations. TransCanada shares rose nearly 3% to $46.88. A St. Louis jury has ordered Johnson & Johnson to pay $110 million to a woman who said the company's baby powder containing talc caused her ovarian cancer. This is the largest verdict so far of the more than 2,000 accusing J&J of not warning about the cancer risk. The shares fell 44 cents to $123.51.
And now to our market monitor, who likes companies with exposure to emerging markets, technology, and the aging demographic. Last time he was on in November, he recommended Waters, Ecolab, and PepsiCo, all of which have risen. He's Alan Bond, top-performing co-portfolio manager at the Jensen Quality Growth Fund, which is up more than 8% this year. Alan, welcome. Record highs for the NASDAQ and S&P today. The Dow not far behind. How much higher can this market go?
Yeah, that's clearly the question, and it's obviously been a very, very strong start to the year, and in many ways, really kind of a continuation of the rally we saw in the fourth quarter of last year. One trend that we have our eyes on is that as we look at leadership this year, the market's being led by high-quality stocks, and that is a bit of a change from last year. That's a trend that we like. These are the kind of stocks that we like, stocks with consistent business models, high returns on capital, and so it's a trend that we support, and it's been a favorable backdrop for us.
You also recommend strong emerging market growth, technology, and you're focused on aging demographics. With that in mind, your first pick is Becton Dickinson.
Yeah, so Becton Dickinson is a global healthcare company that dominates the world's markets for needles and syringes, and they get more than 20% of their sales for emerging markets, so it's a great stock for that theme as well. These traits have allowed Becton to produce consistently high returns on equity. That's a real key for us. They announced a large acquisition last week. They're going to buy one of their competitors, C.R. Bard. We think it's a great strategic fit. We think they can take costs out of Bard, but also accelerate revenue growth by expanding all their products around the world. And importantly for us, both these companies consistently generate high returns on capital and produce a lot of free cash.
And a quick thought on Emerson Electric, a kind of mini GE in a way.
Sure. So, yeah, Emerson is a global industrial conglomerate with a broad portfolio of businesses that are really all aimed at making other businesses more efficient, more streamlined. And they have very strong market positions across these businesses. And we think that's a real key for them. About a big chunk of their business is exposed to energy end markets. And we think that's interesting right now. We've seen stabilization in those end markets. We think that positions the company very well for earnings growth here as we get through the year.
And we'll finish up with Oracle. Enterprise software.
Right. So Oracle is one of the largest enterprise software companies in the world with a real focus on database software. That's software that's used by businesses to do things like manage human resources and enterprise risk. And it's a business characterized by very high customer switching costs. And we think that's very important right now. Oracle is transitioning their business to more of a cloud-based delivery model. We think those switching costs will help them do that. And as we've looked at recent earnings reports, we've seen evidence that that switch and that transition is working. We think that's very good for the long-term health of the business, and we also think it will bode well for the stock.
All right. Alan Bond, thank you. Bond is with the Jensen Quality Growth Fund.
Coming up, a powerful mission. Two sisters created a line of accessories that do a lot more than just complete the outfit. Their bright idea is next. The Department of Justice is reportedly investigating Uber. According to Reuters, federal investigators are looking into the ride-hailing company's use of software that helped its drivers evade local officials in cities where Uber was not yet approved. The probe is in its early stages, but it adds to Uber's recent controversies, which include sexual harassment claims, high-level executive departures, and a trade secrets lawsuit.
The month of May is Military Appreciation Month leading up to Memorial Day, so we introduce you this evening to two sisters living in Denver. One, a former Army captain who got the bright idea to make fashion goods, bags, accessories, and the like, out of durable, colorful, surplus military-grade material.
It's lined with the BDU camo.
Imagine helping to launch your company while on active military duty in Afghanistan. Then again, Emily Nunez-Cavness makes finding time to do the impossible fashionable.
I actually designed our signature tote bag when I was a second lieutenant in my basic officer leadership course.
Emily and her sister Betsy Nunez grew up in a military family. But Emily, an ROTC student, was in her senior year at Vermont's Middlebury College in 2012 when she asked Betsy about making a tote bag using material from an old Army tent.
I could definitely see the wheels turning. I just started asking her questions. What would it look like? Why do you want to make one? Who's going to make it?
Within days, they began shaping a business plan. Their mission? Repurposing military surplus materials to create a sustainable product line, one that can also sustain careers for military vets.
I also heard about challenges around veteran unemployment, and those were really memorable conversations.
Betsy had already been working in e-commerce, but it was their mom who stitched together the first prototype tote bag. Emily had deployed to Afghanistan by July 4th weekend in 2013 when their company, Sword and Plow, began selling 3 products: the tote, a rucksack, and a messenger bag. They've made more than 25,000 shipments since. Their made-in-the-USA products have used more than 30,000 pounds of military surplus.
Anything from shelter half tents to parachutes to canvas to to aircraft felt and insulation.
This is the ACU Digi camouflage, the uniforms I started out wearing.
Even material used to make American flags.
There was a lot left over, so
it's a great navy color.
5 of their American manufacturers are either veteran-owned or partly staffed by U.S. vets. In Kentucky, Army veteran and entrepreneur Shanna Rottenberg makes their line of hand-hammered jewelry out of .50 caliber shell casings. Sword and Plow supports 65 veteran employees.
For a lot of people, it is a struggle to find where they're supposed to be after they serve.
Laura Keenan came on board after 11 years of active duty, including 15 months in Iraq. The former Army major still serves with the National Guard, but since meeting Emily and Betsy at a White House event in 2015, she's been helping them give civilians a better understanding of the military, a gap many feel has widened over the years.
Someone complimented me on my jewelry. We had a really thoughtful conversation about my service in the Army.
Each product, handbags, pouches, toiletry kits, camouflage travel bags, priced from $19 up to about $360, has its own story.
We just got some parachute material, which I'm really excited about, being a former paratrooper.
An added bonus? Sword and Plow has donated 10% of its profits 4 years running to organizations that support vets.
Every business does have an impact. We think there's a way to do things right and the right way to do things. And we're really excited to be living and working at that intersection.
In the Bible, the term hammer their swords into plowshares refers to the concept of putting military technology to peaceful civilian use. And Sword and Plow, the company, just won a $25,000 grand prize in the FedEx Small Business Grant Contest. Emily and Betsy say that money will help them hire another veteran. They're looking for a logistics expert, anybody out there, to help with inventory management. What a cool...
I love that story.
What a cool story that one is.
It really is.
Love it.
Good for them. That does it for us tonight on Nightly Business Report. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Mathisen. Have a great weekend, and we'll see you Monday.